Okay, so what's risk appetite? Risk appetite refers to the accepted risk level of a credit portfolio. So how much I'm willing to uh, take on in terms of risk for given whether it's credit card portfolio or personal loan or mortgage. So in the credit card example, we just saw, that, okay, on average in the industry, people takes on the risk of around 4% for credit card portfolio. Of course, if your product charges higher interest rate, you can afford to take on more risk. Or on the other hand, if your bank is very conservative, they are only to accept, let's say, 3% loss rate, then that's your risk appetite. So what determines the risk appetite for a given credit portfolio? There's your business model, right? We look at the credit card business model. So you know that after all the deduction of expenses and the industry competition, on average, it's 4%. So your risk appetite usually it's centers around that 4%, right? So you might be able to go to 8%, if you're really subprime credit card issuer, but it's very hard for you to go to 10% and maintain a sustainable business, right? And also the customer clientele. Okay, let's say it's the same credit card product, everything the same, right? Then you issue to different retailers. So almost every large retailers they offer credit cards. So if it's a high-end department store, so the customer there, the risk generally is lower than if you go to a low ticket, right? So like a dollar store. Yeah, there's no offense about people going there, so they're just the frugal consumers. But for some that they just do not have enough income, right? So to shop in a lot of other more luxury places. So naturally, it's the same credit card, but when you have customers to apply from different places, their clienteles are very different, right? So that also drives the portfolio quality and risk level of your credit portfolio. So you need to understand, where you originate your accounts. So what's the customer clientele? And another important factor is the risk appetite of the company, right? So your single credit product is a part of a larger company. So if that company is very conservative, right, well established, they care about reputational risk, so your product is only a small piece of the pie. So in that case, your risk appetite for the portfolio probably is lower versus the if you are a young fintech company, so you want to grow market share, you are willing to serve the unbanked customers, your risk appetite probably is much larger than the previous example.